All right, there we go. And the recording is started. Welcome, everyone. I'm very excited to have you all here. So, if you've ever felt stuck or hesitant or frustrated with your execution, then today, good news because we're fixing all that. So, for right now, drop a quick message in the chat. Let me know what's been your number one execution struggle. Quick note before we dive into all the content. Some of you already know, but I run the research program over at Mara Wealth. It's a structured program that helps traders execute with more confidence. I'll be sharing a few insights from that program throughout this session, but let's dive in. So over the past, even the past week, I've reached out to so many of you, and I've talked with hundreds of traders, and these same mistakes, these same execution mistakes keep on happening again and again and again. It's hesitation, missing trades, getting stopped out too soon, making money and giving it back. If you've faced any of those, you're definitely not alone. And I've made those same kinds of execution mistakes. So the question then is, well, how do we go about solving all those mistakes? So, well, what I've seen is that most traders make decisions trade by trade without any sort of a structured process. And that's a big reason why people tend to feel uncertain when they're in trades. There's no clarity, there's no consistency, and no way to measure progress. So inside the Mara Research Program, we've built a system that removes all that guesswork and lets you trade with clarity and confidence. But more on all that stuff later. For right now, let's break down the exact execution framework that you could start using today. Execution training and step-by-step process. So to fix the execution mistakes, you need a simple and repeatable framework.
Yep.
I'm going to walk you through the three-step process that I use and teach inside of our program. So step one, plan your trade before entering. Step number two, manage your trade with confidence. And step three, review and refine for continuous improvement. So the planning part, that's where most traders fail. You don't want to be making decisions in the middle of the trade. You need to know your setup, your stop loss, your profit target, and your risk level all before you go out and click buy. You should also know how to discern what's a quality setup. You know, baseball season is right around the corner. How many of you have heard the name Ted Williams? Do you know who that is? Type into the chat if you know who Ted Williams is.
Yeah.
All right, great. We've got a few people. So Ted Williams is a Hall of Fame baseball player. And I think that it would serve us all very well to begin to think like Ted Williams. Here's what Ted had to say about how he was one of the best hitters of all time. He said that my first rule of hitting was to get a good ball to hit. I learned down to percentage points where those good balls were. The box, this box right in here, if you could follow my mouse. The box shows where the good balls were. The box shows my particular preferences from what I considered my happy zone, which is this little interior box where I could hit 400 or better, to the low outside corner, this over here, where the most I could hope to bat was 230. Only when the situation demands it should a hitter go for those low percentage pitches. Now, here's some good news. we're not playing baseball. We're trading. So we could leave that bat on our shoulder for as long as it takes to have those pitches that are coming right down the pipe, that are those high probability pitches. So my question is, how can you trade like Ted Williams swung a bat? The answer is to know your happy zone and only take those A plus setups. So how do you begin to understand where your happy zone is? The way that you will know where your happy zone is you've got to define it. Whatever your setup is, have a clear definition. First thing to ask yourself, how long does this setup take to form? Does it take a few days? Does it take a few weeks? Is there a certain minimum or maximum amount of time that your setup should be? How about the pullback? How deep should this setup be? Should it be 10%, 15%, 20%, 30%? There's all different kinds of setups, and each one has certain percentage depth that it should be before it becomes invalidated. Do you have that for your trades? Also start to think about, where in the market cycle does this type of setup work best? Does it work best in a raging bull market? Or is this the type of setup that works when we are in a downtrend? Knowing that can help to put the odds of success in your favor.
Yeah.
Absolutely. And then what makes your setup, once you've defined the box, right? Well, just to go back to this for a second. Once you've defined the whole box here, what's going to define this interior part, that happy zone? What's going to make your setup the A plus setup? Are there certain volume characteristics? Are there certain price action? Does it need to have some sort of a clean structure? Maybe relative strength, maybe something else? Well, what does it take to take a trade that's maybe a B or a B plus setup to that A plus level setup? Once you have that, then it makes everything else so much easier. You start to know what's in your happy zone, and then it makes a decision of, if something is not in my happy zone, don't swing at it. And it takes off so much of the pressure, so much of the stress. And that's only step one. Here's step number two. Once you're in a trade, your job is to manage it properly. That means avoiding all the emotional decisions and sticking to your plan. Good execution means knowing when to adjust and when to leave that trade alone.
Mm-hmm.
Let me ask you this. Are there any chess players in the room? Anybody play chess? Trading is actually a lot like chess, and I'm going to show you how. You want to manage your trades like a chess player. There's 4 stages to trade management, at least from the way that I see it. Number 1 is the opening. Well, the opening for us as traders, that's when you first put on your trade, and each part of the trade management process, I think that each one has its own objective. In the open, when you first put on the trade, your number 1 objective is to reduce risk as fast as possible, and perhaps to even secure some partial profits. The reason for that is because when you reduce your risk right off the bat, that's the thing that's going to be able to help you keep your equity curve at or near its highs. It's going to help to prevent those deeper drawdowns. If we don't reduce the risk quickly, then small losses can start to become large losses. And then we're spending time later on trying to dig ourselves out of a hole rather than getting our account to fresh equity curve highs. Does that make sense? I hope that makes sense. Awesome. Thank you. Then we move on to the mid game. This is where you're going to lock in profits at key levels, where you might begin to take a first scale out or a second scale out. For me, I generally like to make about twice what I've risked per trade. At least that's what I aim for at the onset. So for example, if I'm risking about 5% on a particular trade, I might start to scale out of that trade once I've made twice my risk. Part of the reason for that is because that's how the math begins to work out. I only need to win half the time. If I'm winning half the time and I'm getting paid twice what I've risked, then the math just works out and it makes getting to new equity curve highs fairly simple, fairly easy. But then for the next quarter of the trade, right now we're into the quarterfinals. That's where we want to begin to hold for a little bit longer. Not every trade is going to give us that opportunity. That's why we need to have multiple ways to manage trades. But for the ones that do begin to have those larger moves, that's where we want to measure how far our trade's running, and then we could take off a little bit more there. And then finally, for that last piece, for those handful of trades that are the true home runs, the true grand slams, that's where we really want to be able to maximize our winners and stretch out gains and have rules for those too. But all this starts with thinking ahead. We need to think a few moves ahead. That's how you're going to be able to manage risk. That's how you're going to be able to play to win. Step 3, review, adjust, and improve. After every trade, we need to ask ourselves, number 1, did I follow my plan? A simple yes or no will suffice. If we start to come up with anything else other than a yes or a no, we're starting to get into the realm of excuses. Simple. Did I follow my plan? Yes or no? It's okay if we all need to improve. Did I follow my plan? Yes or no? What did I do well? And what would I do differently next time? Great traders don't just trade, they review and refine their process. If you're not tracking your trades and making small improvements, you're leaving a lot of progress on the table. So, how to review your trades like a pro? Here is a very simple 3-step process. Number 1, start by looking at the chart. Do it as best as you can without any bias. If you're looking at the chart and you have loads of annotations on them like I do, I like to mark on my charts quite a bit, turn the annotations off, and that can help to reduce a little bit of the bias. And then ask yourself this: if you didn't know that this was your trade, would you take it again? Number 2, compare to your plan. Did you enter the trade where you plan to enter the trade? Did you exit the trade properly? And here's another tip. Remember in step 2, when we started to think through the different stages of the trade and how we would exit and begin to manage the trade? If we don't have a trade management plan, then that's part of what makes it very difficult to think about, did I exit this trade properly? Because there's no measuring stick, there's no litmus test. So if we think about those things ahead of time, then we are able to say, well, with certainty, yes, I exited properly because I followed my plan, or no, I didn't. And then we know exactly what we need to work on. Number 3, spot the patterns.
Yep.
What do your best trades have in common? What do your worst trades have in common? And then here's another thing that I love to do. Keep a great trades folder, right? It could be a literal folder where you're printing out the charts and keeping it in a drawer, or it could be a folder on your computer. Keep a great trades folder. And then also keep a mistakes folder. So that way you're able to track these patterns over time. And that's going to create a lot of self-awareness, and you'll be able to do more of what's working and avoid what's not.
Work.
Absolutely. Now, everything we've talked about so far today, execution mistakes, filtering high quality trades, managing risk, all of it comes down to one thing, and that one thing is consistency. Most traders don't struggle because they lack knowledge. They struggle because they don't execute what they already know consistently. And that's exactly why I built the Mount Research program. This is designed for part-time traders who want clear, structured guidance so they can execute with confidence without spending all day on research. Here's what's inside. You get daily market research, clear insights from me, 10-minute videos, 10 to 15-minute videos. I tend to explain things pretty thoroughly, so we'll go through it, and you'll see general market. You'll see every trade that I plan to take, explained. If there's trades that I plan on not taking, I also explain those too, so that way you can see, well, what's good versus what's not good, and give you those kinds of insights. You'll be able to execute a focused strategy. You'll be able to trade smarter and more confidently. Everything that we've spoken about in this webinar is exactly what we're doing inside of the program. And to make this whole thing even more powerful, we've added some brand new upgrades to help you execute at an even higher level. First off, execution walkthroughs, where I break down real trades step by step so you can see exactly where traders go wrong and how to fix it. How do you know if a pitch is coming right down the center or if it's off the plate? These execution walkthroughs will help you with that. And this is where many of the biggest breakthroughs happen for people. We've also added a monthly live Q&A to the Mara Research Program. The market is always changing, it's always evolving, and having real-time discussions each month ensures that you get to stay ahead. You'll get direct answers to your questions and insights into how I'm adjusting based on various market conditions. So I'm not just telling you that this works. Right here, these are real traders who were once exactly in your shoes. They struggled with execution, they second-guessed their trades, and they felt stuck. Until they had a structured process to follow. Anthony, in the top left here, he had trouble locking in gains. Now he's able to execute with confidence and to do that consistently. Stu used to make emotional, inconsistent trades. His thing that he would often tell me is that he had itchy fingers. Now he's having his best results ever. Consistently, last year, the year before that, triple-digit returns, back-to-back years. Absolutely incredible, the amount of progress that Stu's had. And Rizard, he needed something that fit his busy schedule. And now he's finally making steady progress. And here's the best part. You don't need to trade full-time in order to trade well. You just need the right system, one that helps you stay disciplined, focused, and prepared for every trade. You can keep trading as you've always have. You have two choices: to continue trading as you always have, going at it alone, second-guessing your execution, and hoping things improve. Believe me, that was me for a very long time. I struggled for 10 years before I finally figured this part out. That part doesn't, it simply doesn't work. Number two, you can follow a proven process, eliminate guesswork, and finally trade with confidence without spending hours glued to the market. So right now, the choice is simple, because if You join before Friday, you get to lock in a lower rate for life. Instead of paying $97 per month, you lock in $57 per month. Instead of paying $997 per year, you lock in $597 per year. And this is the last time you'll see these prices. Once they're gone, they're gone. So if you're serious about living up your execution and seeing real results, this is your moment. Don't wait until the last minute. I'm going to drop the link to this into the chat. There it is. And we will hop on over to the Q&A. All right, so what questions do you have? Drop them in the chat and I'll answer as many of them as I can before we wrap up. This is your chance to get clarity on anything we've covered today, whether it's about execution, risk management, or how to apply these concepts to your own trading. Please feel free to type into the chat, or you could raise your hand and I'll start calling on people. Daniel says, will these slides be shared? Yes, the full recording of this will be sent out later this evening. Fred says, when will the monthly live Q&A go live? The monthly live Q&A will be going live at the end of each month. That's when you'll be invited to it too. Earlier in the chat, Daniel says, how much percentage should you be taking off in your first partial profit? Excellent question. There's a couple of different ways that I would go about answering that question. The first would be, it depends upon your style and your system. So I would want to know a little bit more about your style first. So if you're able to unmute yourself, Daniel, then, and I think that there's a couple of Daniels in this room. So the Daniel that asked the question about how much percentage should you be taking off in your first partial profit. If you're here and you're able to unmute yourself, please do so, and let's dive in a little bit.
Yeah, I would categorize myself as mostly a swing trader. I don't hold my positions for more than like a couple of days. So I enter, like you said, I'm looking to take partial profit on the first day or on the second day, and then maybe let the rest of the position run. One thing that you said was like, you said that taking those partial profits is important because it keeps your equity curve at highs. So I've always struggled at when should I be taking that first and how much, and then I'm always constantly trying to make that decision, and by the time I decide, most of the trades fail, right? Most of them are not going to go. Most fail, and so I'm not able to capture those profits.
Yeah,
so what would be your guidance there?
Yeah, and thank you for all that extra context. It makes it a lot easier to help give you insights. So let me ask you this: do you know what your winning percentage is?
It's probably in the 20s and 30s.
20s and 30s. Okay, so with 20s and 30s, and what's your reward to risk? So what do you typically make per trade? What's your average gain? What's your average loss? Do you know those numbers?
To be honest, it's kind of all over the place. I've always been like that type of trader who likes to make home runs. Like I want to make 20, 30, but I've been in this type of market, it's almost impossible. So yeah. I think I need to change my mindset from making home runs to making consistent gains, right? because
Absolutely.
my entries are good. Like I'm in profit most of the time, but then I don't have a plan of locking in those profits, and that's what I said. Like most of those trades fail. Like they never go to that 20-30%.
Mhm.
They go run up a couple of percent, and then they fade, and then I'm in the red. Like I don't have a plan. So
Uh, so one of the things that I like to do, and this is uh, a little bit more advanced. What I like to do is to track I track all of my trades, and I track how far my trades run. So sometimes we'll be in a very strong environment where it is that home run kind of environment, but those tend to be far and few between. Most of the times, the market is going to be in this sideways mode where we need to be able to take gains a little bit quicker, especially as a swing trader. So by tracking the results, right, by tracking our own trades, what we'll be able to see is, are my most recent trades running further, or are they starting to get to a point where instead of running 20 or 30%, most of these trades are breaking out and they're running 15% or they're running 10%. If I'm able to see that, then it doesn't make sense to wait for the 20% gain or the 30% gain if most trades are only running 10 to 15%. And then it also gives us another way to adjust the downside of the equation too, because if that a, a good part of trading breaks down into, does the math work? So if we want to be able to have that coin flip scenario where if it lands on heads, we're making $2. If it lands on tails, we lose $1. If that's the case, then if a trade is only getting to about 10% or so, and then it comes back in, then we know that we need to take trades where the risk is a little bit smaller. But we also know that we need to we need to exit trades a little bit faster, because we're no longer in that market environment where trades are running 20%, 30%. Kind of like the scenario where we've been in for the last month and change. And even I don't know about you, but for me, the last month and change, it's been that scenario where all the pitches are coming way off the plate. So I'm just sitting with the bat on my shoulder. Everybody's going to have a slightly different view on where their happy zone is. But if we define our happy zone, then that's one of the things where we'll know if it's a pitch that we should be swinging at. And if it is a pitch that we should be swinging at, great, put on the trade. If it's not, then keep the bat on your shoulder. And that'll be something that'll not only help you to get to the better gains, but it's also going to be able to help you improve your batting average. And that if you do both of those things, that's going to help you raise your equity curve.
got it. Yeah, thanks. So the takeaway I got was just keep just track my trades. How much percent, and try to secure in those profits early.
Yeah, exactly right. You want to track your trades. Tracking your trades is step number one. When you begin to see the market is not giving you those 20 or 30% gains, then begin to adjust where you'll be taking those your profits. And when the market does begin to turn and you start to see trades running further, then that's where you can dynamically adjust where you start to take profits. And that's something that we do inside the program too. I tell people where I'm taking profits on my own trades and why. And a lot of that why has to do with how far trades are running right now. If we're in a strong environment where like in October, November, where trades were running 40, 50%, some 60, 80% like Reddit did, then that's when let the trades run a bit further. When the market starts to go into a chop zone and trades aren't working as well, then that's where we adjust and we start taking profits a little bit faster. What other questions do you guys have? Does that help, Daniel?
Yeah, no. I think I need to start journaling more often and to start taking more profit and just kind of seeing how can I make it work in my favor. Right now, I think I'm shooting for home runs. That's just not. It's less likely to happen. I need to.
Right on.
Yeah. So I need to do homework there.
Yeah, absolutely. Journaling is one of the best things that that you could do to improve your trading, hands down. What other questions do we have? Let's see. Different Daniel says base hits and doubles. Vlad says it's great to have this opportunity to talk to you guys. I'm a big admirer of Pat's mission winners. Shout out to Pat.
Hey,
My
thank
struggle
you.
is with My struggle is with consistency and limited time I can dedicate outside my 9-to-5 job. If you can share any advice, know-how, that would be great. Thanks a lot. Yeah, so one of the things that helped me a long time ago, right? So, well, I don't know how much of my story you guys know. There's a lot of you that I think that might be seeing me for the first time, and so perhaps I should have given a little bit of an intro of who I am. But when I first got real serious about trading, I was struggling for a long time, and then I finally found the New York City Investors Business Daily meetup group. And at that time, I was working 9 to 5, or often 9 to 6, 9 to 7, 5 days a week, and I would study Investors Business Daily and Can Slim at night on the weekends on my commute home on the subway. And it was in there and then learning from the people at the IBD meetup about routines and how to make this Can Slim stuff work. So the guys that were teaching the program, they were trading full time, and one was a hedge fund manager, the leaders at the time. And so I'm trying to think about, all right, what can I, what these guys know what they're doing. How can I make it work for me part time? Because I can't do everything that they're doing and still be able to be effective. So I tried to boil it down as much as I could to just the bare bones. The way that I was able to do that was to begin to think through, okay, what's going to be in my system? What do I want to observe? What's going to be a part of my analysis? As I began to define what's a part of my analysis, very, very similar to the whole Ted Williams thing that we spoke about earlier, the more that we're able to define what it is that we're going to analyze, the more we know what to look at. And by definition, there's a whole lot that we're not going to be looking at. So we're only really focused on just this much. So for me, I like to look at the major indexes, what they're doing. I look at them across time frames. I run various screens, stock screens. I build a universe list, and then I go through that universe list and I look for the types of setups, some of the setups that we mentioned earlier, like flat bases and cup of handles, that kind of stuff. And then I'm looking for what's coming down the pipe. Well, what's in that Ted Williams happy zone? And just by doing that, it really creates a framework where you're able to quickly identify where the market's at, if there's good things to buy, and if there is, great, you put those trades on. If there's not, then you sit and you wait. And also going into it with a plan of, here's where I'm going to enter, here's where I'm going to exit, here's how much I'm going to risk. And because all that stuff is pre-planned, it makes being able to trade with a 9 to 5 very straightforward, a lot simpler. There was a trader way back in the 50s, this guy Nicholas Darvis, who before the internet was busy trading with telegrams. And he would read the paper at night. He would plot charts by hand, and he would send messages to his broker saying, okay, buy here, sell there, and don't bother me in the middle of the day. I don't want to hear from you. If he was able to do it with graph paper and a newspaper and telegrams, we could do it here. So that's how I would do it. That's part of the advice. And if you want to see how it's done, please feel free to hop into the research program while the prices are still where they're at. All right, Vlad, you're welcome. Red C, thank you, Mike and Pat as well. You have both had a fundamental impact on my journey as a full-time trader. Much appreciated. I need to leave the meeting now, but I appreciate your support. God bless. God bless you too, my friend.
Amen.
All right, let's see. Well, what other questions do we have?
If there's no question, I have one more question. You know, as a trader, like you need to find your setups, right? And like what you're good at, right? You're not going to be good at finding everything, but you know, what does that process look like? Like what should you be doing in the initial stages, like as you're trying to figure out like what is A plus, what is, you know, B minus, whatever, like
Yeah. In the very beginning, none of us are very good at this at all, right? It takes a little bit of time to figure out, well, what are we good at? And the getting good part, the confidence part. Confidence is really just the memory of past success. So how do we get that kind of confidence? The way that we do it is going to be through going back and doing, I call it back testing. My friend Dennis Wilborn and I, we were just talking about this yesterday, or was Monday. We had spoken about this. He calls it simulated trading, where you identify the pattern that you want to look for. Let's say that you wanted to. Are you familiar with the different types of patterns, like tips, the types of patterns that William O'Neill spoke about, or are you just getting started?
yeah, I'm aware of those patterns.
Okay, great. So you're aware of them, and you kind of know what they look like, and the length and depth and those sort of things.
Yeah. I think it's pretty clear. You know,
All right,
what to
great.
look for. Yeah.
So then what I would do would be to go to some of the big leaders that we've had in the last cycle. One of the studies that we did, started to do with members, was to start to have people build their own model books. We've gone through Netflix, gone through Reddit. We've also gone through, I want to say, Spotify, and marked up these charts. I like to start on the weekly chart. Mark up, well, where do you see the flat bases? If there's other patterns that you're able to identify on there that you trade, mark them up too. Start on the weekly chart. Then drop down to a daily chart, because that's where, especially since you mentioned that you're a swing trader, you mentioned that earlier, that's where you're going to be doing most of your execution from, or you might even be doing some executing it, if you're really dialing it down, into some of the intraday charts to help confirm that multi-time frame analysis component of trading. So as you drill down into the daily timeframes, and actually let me see if I can stop sharing my screen for a moment and then show you some of the work that we did here. Yeah, because I think I'm just sharing that one tab. All right, so stop the presentation and then let's restart the presentation. Okay, so here's what we started to do with Netflix for its run in 2022 through February of this year. Started out, there was a blank chart, looked like this, and then just simply mark up where do you see the consolidations. If you were to enter, well, where would be the appropriate spot? And so I did that, and I marked up the different runs, and I marked up how long those runs were. And so I started to notice right away, oh, well, they ran 32% over here, 37% over there. Still have some people hopping on the call. That's pretty awesome. 37% here, 27% there. This one ran 32%. So right off the bat, I'm starting to get a feel of how long does this thing typically run before it consolidates again. And that's something you might want to put in your back pocket for later, because that'll help you with the trade management part. Because if you know where the run generally starts, whether you got in, say back here, or let's say you got in over here, you would still want to be able to measure where the run starts. So that way you're like, okay, I might be getting in over here, and I might not be expecting 20% from here. I might know that, oh, well, it's generally closer to 25 or 30%, and that helps you to manage the trade a little bit better overall. Then you could drop into, say, the daily time frame, and then start marking up your charts and starting to see, well, what was tradable versus what wasn't tradable, right? Like over here on the weekly chart, to me, this looked like a halfway decent place to enter. But when I dropped down into the daily time frame, I noticed, oh, there's a couple of flaws in this thing. I wouldn't be trading this. Number one, it was consolidating right ahead of earnings. I'm not going to buy a stock right before earnings. I want to have cushion before earnings. Here's something else. It's not in a stage 2 uptrend yet. I only want to buy stocks that are already in a stage 2 uptrend, then consolidate, then continue, because that's one of the things that gives me a higher batting average. So does that help at all?
Yeah. I think the key is just to look at charts, look at previous winners, and then
Oh yeah.
go through that exercise. What would be the ideal entry? How much does this thing run, like you said, and then find something that works for you.
Absolutely. And I see JC has his hand raised. JC.
Hey, how are you? Thanks
Doing well, thank you. How are you?
Thanks for all this information. It's great to learn. Thank you.
Yeah, my pleasure.
So,
How can I help?
I think I'm stuck in 2022 where I was still in my it's like about second year of trading, and it just every trade that I would put on, it would always go against me, and I was still learning about risk management, market environment.
Mhm.
And I feel like there's been a lot of things that have become much clearer, especially during the last 4 months for some reason. And I'm definitely more aware of market environment. And I've done some work in reviewing my past trades, and I realized a lot of the mistakes that I did, it was just because I was in a bear market. I was trying to catch reversals. I was trying to get bottoms.
Mhm.
So I realized that, and I went through the past, going through the pain of realizing these things, and so now I am still hesitant, because it's like I have like this visceral memory of just that pain of putting on trades and constantly getting getting my stops hit, you know. So I was just wondering if you have any advice to help get over that.
Yeah, and first off, thank you for sharing that. And secondly, I'd like to throw it out to the audience. Have you guys experienced similar to what JC is going through? Right? Because I have, and I've experienced all that where you go through a spell. It's loss after loss after loss. Things aren't working well. It's like, well, what happened? Is it I thought things were going well, and uh, was I just lucky, or what's going on? So, first off, everybody goes through what you went through. Um, One of the ways that you'll be able to start to see if it's the market environment or is it you is through the planning process. Now, were you writing out your trade plans?
Um,
Yeah.
pretty like on the charts, you know, using like a risk reward graph on the charts through TradingView, and I mean, I was definitely respecting my stops. You know,
Mhm.
I think I could have done better when I would have a little bit of gains, but it's like I always wanted more, you know, because during a bear market, I would get this really small gain, and then I guess I was just still hopeful for more gains because, you know, it always, it's like a flag that,
Mhm.
you know, it's just breaking out. I get a good entry, so then I'm like, okay, this is it. It's gonna go up, and then, you know, the next day it goes up a little bit. I put my stop up, you know, just to break even, but then I would get stopped out.
Mhm.
Um,
Yeah.
or, you know, just trying to catch reversals like, you know, gap down reversals or parabolic longs or something like that, and it wouldn't work. And then, you know, but that was still during my learning process, but that pain is just still like lives inside, and it stops me from like putting on trades, or if I do put on a trade on a good setup, it doesn't allow me to go big on it.
Well, sometimes that pain could be very helpful.
Hmm.
Sometimes that pain can help us to or prevent us from doing the things that led us to those trades that didn't work out, or from doing some of the actions that would lead us astray.
Hmm.
So, like I mentioned earlier, confidence comes from the memory of past success. So, if we're let me ask you this. Well, what are you measuring your success by? Well, what are some of the things that you measure your success by?
I think most recently, I've been just trying to really focus down on my entries because now that my uh, environmental awareness, it's better now. Like I do realize, you know, if price is under the 10-day, then if you're gonna put on a trade, it has to be really low size, or just, you know, paper trade, or just watch the market. So I think recently I've been successful at that.
Hmm.
Um, so I think my measuring my success right now is just knowing when to trade. You know, just really getting down that market environment, situational awareness, and I'm think I'm becoming much better at it. So I think that's a big success for me. Uh,
Hmm.
so that's how I'm measuring my success right now.
I
I,
think that well, one of the key things to do is to track as much as you can. Right? So as you're actively tracking things, and I'll show you the kind of stuff that I track, and if you do similar, I think that you'll start to have more confidence in your execution. Because if you're actively tracking this stuff, that then the answer of should I put on a trade or should I not put on a trade, it starts to become a lot easier.
Mhm.
So, for example, I haven't put on I've been sitting in cash for about coming close to 4 weeks now. Here's, and I hope that this screen doesn't overwhelm, but this is some of the stuff that I like to track. So like I'll track where the market is, the different trends that it is, and I'll track other data like new highs and new lows. And the part that I'd like to focus on is this right here, right? So the trade grades. This is basically telling me, it's giving me that Ted Williams scenario. Are there those fat pitches coming down the pipe or not? So if there's nothing in the action list, then that's telling me that, oh, all the stocks that are in that I would even be interested in the first place, if they're not setting up, then there's nothing for me to do. So right there, that's going to already help my batting average and help me to be more confident. Because if it's a fat pitch that's coming down, then I know that that's what I should be swinging at. Versus if I didn't have that defined, then it would be like, should I be swinging up here, swinging down there, and just like kind of hacking away? Again, like there's no called strikes in trading. So we get to just sit and wait for that perfect pitch. So define that, and that's going to help to boost your confidence. And then something else that I like to do that takes it a few steps further is to not just track the trades that I'm actively taking, but to track all the stocks that I found that are setting up. Are those doing well or are they not? Because if I've got a good shot at closing my eyes, reaching into the bag and pulling out a winner, then I know that, hey, this is a pretty good market environment. I should start to put some stuff on. But if I'm looking at the market and most of the stocks that are just setting up and I'm finding like B's and C's and the market is treating those like garbage, then I know that this isn't really a favorable time. So I should just sit on my hands. Does that make sense?
Yeah. And I feel like I'm becoming more aware of that. So I think that's a big dramatic change for me in the right direction.
Awesome.
Yeah.
Michael, could I interject here by chance?
Sure.
Good
Go
deal.
ahead,
Thank you. By the way, thank you for having me, Michael. You do good work. You go in depth and stuff like this. Folks, I've been doing this a long time. I was running money into the crash of '87 and everything else since, and I'm grateful for this. I've met some of the best investors. I've had lunch with Bill O'Neill. I've met Ed Sakota, Martin Zweig, David Ryan, etc. I'm a sponge for this. I'm very serious about what I do. I was the sole provider of a family of 6, and we lived off our investing profits and nothing else. Had a stay-at-home wife and 4 kids in private schools. So I'm really, really serious about what I do, just like Michael is. One of the best things you can do, I'm speaking from my heart, folks. You want to get better? Study past winners. Study the charts. Look at the weekly chart. Look at the daily chart. Look at it, analyze it, and say, you will see the common themes where it's going sideways and it finally breaks out. I'll give you one to look at, or just a couple. Punch up, you don't have to do it now, but just punch up BABA, Alibaba. Take a look at the chart and you'll see exactly where we bought it. In fact, I'll give you the heads up. It was bought on February 7th. Here's another one for you. Meta. Meta was bought on January 23rd and January 24th. Look at the simple base. Why is this so important? Be very pragmatic. We want to see what other people see. We don't want to be the person that, I know a chart pattern that nobody else knows. Then they're not going to buy it. Focus on simplicity and look for that volume surge. You will find that volume tells us that they're voting. Focus on stocks, and then I'm going to stop talking in a minute. Focus on stocks that are in leading groups. Focus on stocks, again, that has simple bases that everybody can see. Focus on stocks with a composite rating of 90 or higher. Be stringent. We're talking about your money. Don't think, well, I'm going to try all kinds of stuff. No. Do what works and turn off the noise that's out there on the internet. It will help you dramatically. The last point, you'll find stocks, they break out. Look for that volume. Volume, again, tells us other people what we see. And then ride the trend. One of the most powerful moving averages, the 8-period exponential moving average. Just watch it. Look at Meta, META. Look at the walk up the 8-period exponential moving average back in through February, mid-January through February, mid-February. You'll see exactly what I'm talking about. Friends pay more than anything else that you'll do. Never argue with price. And always this, the last thing I'll say, be thankful and always be humble. Always be humble with what we're doing. It will help. There's a lot more than that, but that will help you. And again, I was a sole provider of a family of 6, and we lived off investing profits. I had to get this right. So I just wanted to share that with you as far as be stringent, run your race. The compare game will eat you up alive. That's Absolutely. My background in psychology too. Anyway, I just wanted to, you all have great questions, and I admire your drive and ambition. And Michael, I admire the service that you're providing to help these people. Well done. Well done. I won't say anything else, but good job.
Thanks a lot, Pat. I appreciate all that. And you're absolutely right that studying the past winners, going in, and that it's great to start with say, Bill O'Neill's book, How to Make Money in Stocks. There's a lot of model stocks in there. Mark Minervini also highlights a lot of model stocks in his book. I have several in my book, the Trading Mind Wheel. But what you want to do is to also not just read it in the textbook, but to go and to mark up the chart yourself.
Right on.
Right? Go to whatever platform you're on and actually mark it up yourself, because that's going to train your eyes. It's going to be able to train your fingers too, because when you're drawing all this stuff over there, that's where the real training happens. So we just have a few moments left, but before we close out, I'd like to say thank you to everybody for spending this time with us today. I hope that this helped you think a little bit differently about execution and gave you a clear and actionable plan. If you want to stop second guessing and start executing with confidence, this is the time to take action. The price increases on Friday night at midnight. If you join before then, you lock in the lower rate for life. So to make it easy, I've dropped the link in the chat, and I'll put the link in the chat once more because we've had a lot of conversation. But you could also scan that QR code or go to marwealth.com/research and take advantage of this offer while it lasts. So I'm happy to stick around for a few more moments here if there's other questions, but that's what I have for you today.
And I'll just interject. Michael didn't tell me to say this. Michael does good work, good fundamental and good technical work. I've known Michael a long time. I'll just share that with you. I want to pass that on. And he didn't tell me to say that. I'm doing it on my own volition. So just want to help.
I appreciate that, Pat. Thank you.
Keep rocking, brother. Keep rocking.
Thank you, man. You too. I've learned so much from you throughout the years.
Amen, brother. Got it down to its time. We work good together.
I sure do. Let's see. Let me go through the chat. Chat's blowing up over here. Daniel had outlined, looks like he outlined a lot of the Trading Mind Wheel book. When I found Michael, my trading development started by laying in the foundation for Michael's step-by-step process, the 8 essential skills needed for successful trading. The Trading Mind Wheel book. Mindset, journaling, analysis, risk, trade management, portfolio management, post-analysis, and testing. Trading takes time with patience, an area I continue to work in my personal trading and development. Thanks, Michael. God bless. Thank you, Daniel. Thank you for sharing all that with us. Developing those skills are all very important. Let's see, any other questions? I'm going to go back to the top of the chat here. Or if you want to unmute yourself, if you have something else that you'd like to ask, by all means, now's the time.
Yeah, I have one final question.
Sure.
So, like, you're a trader. You're not yet profitable, and you're trying to get to that point, right?
Mm-hmm.
Um, and sometimes, yeah, there's going to be obstacles, right? You know, there's going to be setbacks, and you thought you knew what you were doing, and then you realize, okay, this time it didn't work out. I guess it's more of a motivation question, but like, what has helped you, stay motivated? Um, for me, like yes, like I am primarily trading for like financial freedom. Like I would like to, have that freedom, and I think that trading gives me that, right?
Hmm.
And that's what's keeping me motivated, right? But
Hmm.
you're constantly seeing these obstacles and setbacks, and in that initial phase. So how can you make that transition period from unprofitable to profitable? How can you make that like a lot shorter, and more easy on yourself? Because I think sometimes a lot of traders, like, they're pushing themselves very hard, and like you
Hmm.
said, they're not keeping things simple. So what should be the guidance there?
Yeah, the excellent question. The thing that's worked for me and the thing that I've seen work for so many other people time and time again is to really get around the right set of people. Like for example, for a long time too, before finding the New York City IBD meetup and getting around those kind of people, there I didn't have anybody. And because I didn't have anybody, I was just trying to do everything myself. That's why I was stuck in neutral for close to a decade. That was before X or Twitter was even around. But now, where I see a lot of people get stuck is they'll have different people that they're following on social media. And what you tend to see on social media are everybody's highlight reels. And that, well, when you're only seeing somebody's highlight reels, then that's something that can cause us to play the comparison game. Why is everybody else doing so well when I'm still stuck here? Well, the reality is that we're all more or less in the same boat. And that's why getting around real people can make all the difference in the world. So if you join a group, let's say, well, whether it's our group or you find something close to home or somewhere else, when you start to deal with real people and you have a community where they're sharing their wins, they're sharing their losses, their struggles, all that stuff, then that's how it starts to become more real and it starts to become more supportive. Um, our group is fantastic. The people are in there. We've got a 7-day challenge going right now, and everybody's contributing. People are helping one another. It's really fantastic, and it's that kind of environment that fosters growth. Where they say that if you want to go somewhere fast, go by yourself. But if you want to go somewhere far, go as a group. Find the right group, get the right people around you, and that's part of what's going to help to motivate you too. And when you've got somebody that can where you can bounce ideas off of, or if you're stuck, to be able to reach out to a coach or somebody that can give you answers, then that's something that's going to supercharge your growth too, because you're not just stuck there thinking, well, what do I do? You could actually go and talk to somebody and get real answers. And that's part of what we're aiming to do with this research program too. It's why we've gone and added that extra Q&A.
Cool. And this research program, is it kind of like a Discord group, or like, what does it look like?
So with the research program, the way that it looks is you're getting uh, the reports. You're getting. I send out a daily email that has a video that's attached to it where I'm walking through the entire market health. any trades that I'm finding, and I'm not just walking through it like a news reporter, but I'm explaining what I'm seeing and why, and well, what like if for example, coming into today, the market started to bottom, it reversed, and then it's like, well, is this, if it's what we're seeing in the market right now, is this the a bottom, or is this a point to start to where we should start to get ready? Well, there's a variety of things to look at. And I share what I'm looking at and why, as far as not just the general indexes, but also individual stocks and those kind of things. Giving the whole plan, breaking it down, so that way you could see not just what I'm seeing, but understand why I'm seeing what I'm seeing. Then you have the opportunity to reach out by email and ask me, well, what's going on and how and why. We have another program that it's the accelerator program that that one has the Discord in it. With this, we've added the Q&A, so that way you're able to, everybody's able to come, similar to a meeting like this, where open mics, being able to sit together for half an hour, once a month, go through whatever questions that you guys have, and to be able to have a real dialogue.
Cool. And is it possible for you to share like a past report of like, so I can see how it looks like?
Yeah, absolutely. Yeah, let me go into this here. Give me 1 second. Actually, let me could just go into this, and this should open right up. Yeah, let me know if you're able to see this on your screen.
Yeah, we can see it.
All right, great. So this is what it looked like yesterday. Video with every day you get a video. This one is about 15 minutes long. If you're somebody that likes to mess with the speed, you could mess with the speed. I also include the updated playbook, where you could go through this and I explain inside the program how to use it. There's also a basic education that's included with the program. Part of it's how to read all this kind of stuff. Part of it's general mindset and basic analysis. So that way we're all on the same page. Then on this tab there's also the open trades. You can see that I'm in cash. Coming into today, there's nothing on the action list. And yesterday I actually explained the handful of trades that I saw that were setting up, but I explained, well, here's what's wrong with each one of these names and why I'm not trading it, but they are consolidating. So, feel free to reach back out and ask other questions. And I also ask people too, well, what are you seeing from the work that you're doing, and to share that, and we could go through those sorts of things together. And then also in this, there's a daily report, and the report basically summarizes what was in the video. And yeah, well, one of the things that this market has felt like is picking up the shiny nickels in front of a steamroller, right? You might be able to beat the speed of the steamroller, but it's generally not a good idea. And then mentioning the 7-day challenge, and we're almost done with that 7-day challenge. So
Got it. Yeah, no, thank you for sharing this. It helps me to see, like, what the program, like, it gives us.
yeah, absolutely, my pleasure. Yeah, this program will help quite a bit. If something like this existed back when I was first starting out, it would have been night and day. And the reason why isn't just because, well, here's somebody that's telling me what to think. It's explaining why they think what they think, and then being able to ask questions. And then you're able to brainstorm and make your own adjustments. And it's not just about the market and the stocks and those kind of things. That and the sizing and all that stuff is great, but it's also the journaling part of it. It's also the mindset part of it, the post analysis part of it. In the playbook too, you have you're able to take all these tabs, right? And then there's well, didn't get into this, but there's how I was talking about the Ted Williams analogy from earlier. I have all the setups that I take all written out, what I'm looking for and why, and the look and character, the market type, examples of it. So not only do you get all that, but you're able to go into this, click make a copy, and then make a copy of it for yourself. So you've got a template that you can follow, and it makes life quite a bit easier for everybody. So, yeah, I think that's it. Are there any other questions? Daniel, does that answer your question?
Yeah, no, it was very helpful. Yeah, thank you for sharing that.
Yeah, my pleasure. Anything else before we call it a day?
I think if I could just interject, one of the best things that you all could do, study past winners, study past winning charts. I mean, really, don't look at them, study them, study the price and volume constraints. You will find the best stocks that make huge moves are consistently coming out of a simple chart pattern that is easy to see. They also have great earnings and are great sales, and they are in leading groups. This is a fact, not an opinion. Focus on that. Always manage and control risk. One of the best things to do when you buy, if it keeps going, add to it. If it starts to pause, sell some into strength. Not all of it, just a little bit. It guarantees a profit, but it also lessens risk, but it also lessens stress, which leads to clearer thinking. And never again let a good profit turn into a loss. Ride trends for as long as you can. And also, I'll say this, high composite rating stocks, focus on stocks that are leaders, and you'll do much better. I just had to share that, Michael. I appreciate you. Thank you for letting me be part of this, brother.
Yeah, absolutely. Thank you so much, Pat. I appreciate you being here and for sharing this webinar with everybody on your X stream. That was
You're
awesome.
good, buddy. Keep up the good work, my friend.
Yeah, thank you. I appreciate it. You as well. And
hopefully we'll talk soon.
The X stream for you if you want to follow you.
oh, Pat. Yeah, Pat. What's your handle?
The company that I have that I started is called missionwinners.com.
Missionwinners.com. Is that your handle on X?
Yep. Also, I'll share this, what mission stands for. Markets, industries, sectors, stocks, institutional support, outstanding management, outstanding product, or outstanding service, and the N in mission, never say never. And I've got degrees in psychology, and I will tell you, we've got to constantly keep working, pushing forward. Mindset. I love this quote. I never met a wealthy pessimist. The opportunities are there. That's why Michael's got the business that he has, helping people, working with people. Focus on that. Always, though, be humble. Always control risk. Always. And never average down. You are wrong. Do not make yourself more wrong. These are things I used to teach at the IBD meetups for years. Anyway, I hope that helps, and I'll be quiet. That's all I got. Thanks, buddy.
Awesome. Thanks, Pat. Daniel, you had one more thing, or
I don't know. I'm good.
all right, great. All right, well, thank you, Daniel. Thank you, Pat. Thank you, everybody. This has been amazing, and hopefully we'll get together again real soon. And if you're interested in the program, now's the time. Don't sit on it because the prices are going up on Friday. $67 a month or $597 a year right now. And those offers are there until Friday at midnight. So that's it for me. Take care, everybody, and God bless.
Thank you.